welcome back to a brand new episode of the Hustle for Good show and podcast. Today's guest is a guy that I met recently at a conference, and he's a surfer. We connected over that. And so his name is Lee Clay. He's a director of impact at Regatta Impact. How you doing, Lee?
I'm great, Steve. Thanks for having me.
I'm excited to have you. So why don't you tell me what do you do? Like, tell me what's an impact advisor, and tell us about Regatta Impact.
Sure. Well, our firm is a financial firm. We do primarily investment guidance and advisory services along with financial planning. So the long and short of it is we work with people who have money that they want to be growing and they want to be working for them instead of just sitting in a checking account. We also help people kind of navigate major life milestones, things like, how do I save for retirement? How much do I even need for retirement? How much do I need to save for my kids' college? And what's the best way to do that? So we kind of advise people on just all those different topics, from starting out in your career through retirement and kind of through your senior years. My little specific corner of that is doing that all through socially responsible and impact investments. So I work with clients, a lot of which are either creative professionals or just care about things that are along the lines of the environment or social justice or gender equality or affordable housing, people who want to put their money to work along in ways that kind of promote a social or environmental good, but at the same time are going to grow so that they've got that money down the road when they need to use it.
That's awesome. And how did you come to this as your career?
That's actually a really funny story. So this is actually has been a career change for me in the last few years. My first career was I spent almost 2 decades in the entertainment business, where I was an independent producer and started out at Dreamworks working for Steven Spielberg on movies like AI and Minority Report, and then over time launched my own production company with the idea that I wanted to make movies that were going to do good in the world, that were going to address some of these big topics like guns and violence within the inner city and opportunities that are afforded to low-income kids versus the opportunities that are afforded to kids from higher means. So after doing that for over 15 years, I produced about, I think, 11 features.
Wow.
I kind of just came to this point where I was feeling like I wanted to change, quite frankly. And I knew I wanted to do something that still revolved around a social good, a social positive. Really loved working with creative people and consider myself to still be a very creative person and an artist in my spare time. But I wanted to do something where I really could see kind of like measurable impact. And when I really was just kind of looking at myself in the mirror and going, what is it you care about today? It was the environment. It was social justice. It was a lot of the things that, I think have come to the surface in the last few years that seem like really important issues to address. And I had been talking with my friend, who's now my partner, and who'd started Regatta Capital Group, about kind of my interest in potential change and what I was passionate about. And Spencer and Russell, who founded Regatta Capital Group, came to me and said, hey, we've been wanting to launch this new division of our firm that's all about working with clients who want to invest their money in a socially responsible way. And, we think you could actually be kind of the perfect person to do this because you have experience running small businesses, starting small businesses. You have a background in finance, your education's in finance, and you clearly have a passion for a lot of these issues. So that was kind of the conversation that started the ball rolling. And after a couple months of kicking the tires and doing the research and talking about how it all worked, we decided to move forward and we launched Regatta Impact a little over a year ago. So so far the response has been great. We're super excited and just enjoying every step of it.
That's really cool. I Yeah, the first time I learned about this, I think for me, I've been in the impact space for a long time, but it wasn't until I came across impact investing. I thought it was like really high level, like, hundreds of millions of dollars that went towards like industry type things. But and it wasn't until like a couple years ago where I came across, um, a fund. There's all these different funds that you can channel yourself. But why don't you walk us through the sort of the suite of like how people, like a normal everyday working professional or even entrepreneur that wants to make their retirement income or their investments, like walk us through like the different avenues in which that come about, that it can come about, that you can make an impact with your money that doesn't require you having to have hundreds of millions of dollars.
Oh, for sure. Well, to your point, I think for a long time, there were a lot of pension funds, and huge institutional investors that were putting money to work in this space. But really, I would say probably in the last 5 to 7 years, we've started to see a big shift into the retail space, meaning everyday people who have a 401k, or some extra money that they're saving for retirement. And there's a lot of different ways to do that. It a little bit depends on kind of I guess the SEC has different thresholds that an investor has to cross. And every time you cross a threshold into becoming an accredited investor or a qualified client or a qualified purchaser, there are new opportunities that open up to you. But you don't have to be even accredited in order to invest socially responsible way. So kind of the most basic thing that we do is if we think of your portfolio as a house, most houses, you start by building a foundation. And for us, that foundation is kind of a diversified portfolio of stocks and bonds that are, some big companies, some small companies, some U.S. domestic companies, some international companies, but all of which score highly on, it's called an ESG metric scale. So ESG stands for environmental, social, and governance. And in the last few years, there's been a lot more tools that have been put in front of advisors that allow us to really drill down on which of these funds is really going to kind of be the most socially responsible. Likewise, Morningstar, which is a large research platform, has started to give sustainability ratings to mutual funds, so that you can actually see, this is a like, they're little globes. So it's like a 3-globe fund, or this is a 5-globe sustainability fund. So we really try to focus on picking funds that have a specific focus on high ESG. And that's kind of the most basic thing. We also work with companies that, small and mid-sized companies that have 401ks and are working to kind of pioneer an option within that 401k plan that would also be a socially responsible option, so that people aren't just forced to pick between option A and option B and they both have oil or fossil fuels in them. Now you can pick option C that is fossil fuel free and free of weapons, free of any of the quote unquote traditional sin stocks like predatory lending or adult entertainment or tobacco, for example.
Wow. And I feel like oftentimes if you're an entrepreneur, you're running a business, you want to start offering investments, 401k to your employees, that you're often stuck, right? So you're stuck with what you're given, which is honestly, it stinks, because even, in my businesses I was like, wait, I have this high sort of high fee sort of thing, and I don't even know what they're truly investing in. And so it sounds like an amazing option for people that a lot of people don't necessarily know about, right?
It's absolutely true. And certainly with 401ks, part of that is a result of there's a governmental body called ERISA, which is kind of a governmental watchdog to make sure that, 401ks are being handled with investors' interests first. And so there's a lot of rules and regulations that go around putting together a 401k plan that, I think for a long time have restricted providing ESG options. But now there have been some changes that have gone into effect that are allowing us to be a little bit more flexible. And certainly as more and more data comes out and there are, like I said, there are more tools available, we've been able to kind of really pioneer this space because it's not something that a lot of people are doing yet. And we look at that as kind of one of the things that hopefully makes us a little bit different.
Yeah. So why don't, so do you have your sort of basic stocks, 401k and then you also manage stuff, manage 401k for businesses. How else, like, if you're an entrepreneur, business owner, or, like a seasoned executive that's looking to sort of go to make your money work in a more sustainable, socially responsible way, what should you be thinking about?
Well, I think, obviously the ESG portfolio is the foundation, and that's kind of the most basic thing that we put together for people. But once you start to kind of accumulate enough assets that you're able to start moving outside of just that model portfolio platform, we start to look at different types of investment opportunities that would fall into alternative investments or private equity investments, also real estate investments that all have an impact focus. And I should probably rewind just a tiny bit in the sense that we kind of have an overall 3-step process when it comes to sustainable investments. And that first one is kind of like I said a minute ago, it's removing all of those bad actors. It's removing guns, it's removing alcohol and tobacco, it's removing fossil fuels. And then from there, we try to take the progressive step forward to actually including the funds that score highly in ESG. Past that, we get into what are our true impact investments, which are moving the needle specifically further on a certain area or theme. Like, for example, one of the funds that we like to use a lot in the alternative space invests specifically in solar and wind farms. And if you put a hypothetical $100,000 investment into this fund, they go out and they take your money and they buy existing solar and wind farms that are generating electricity that they then sell back to municipalities and fixed year 20-year fixed rate contracts. So for lending them your money, you get an interest payment every year of around 7%. After 3 to 5 years, the fund liquidates the assets and you receive your principal back. That's one example of a renewable energy fund that we do. Other examples are in the real estate space. We started investing in affordable housing, which if your city is anything like Los Angeles and San Francisco, we've seen such a huge uptick in homeless rates, despite putting additional taxes on the books that, are specifically there to combat homelessness. And such a big part of that is the lack of affordable housing out there. And there are estimates right now that across the country, we're about 7 million units short of where we need to be. And every year we're losing another 125,000 while we're only building another 100,000 due to zoning restrictions and expenses related to affordable housing. So there's been a big push to get out there and actually find some of these multifamily affordable housing opportunities that would fall into obsolescence and therefore become one of those 125,000 that we're losing every year. But instead of letting them fall off, actually put some capital into them, bring them up a little bit, make them nicer places to live, without jacking up rents or contributing to gentrification of a neighborhood. So that's a space in real estate that we are really excited about and can provide really nice returns. I mean, and I think that's one of the big things that I always find that people are surprised by when I start talking about impact investing and socially responsible investing. Almost every time, not every time, but close to, the first thing is, oh, you probably have to sacrifice returns to do that though, right? And while there may have been a time where that actually was true, that's not how it is today. We have found that we've been very able to serve a double bottom line, and that we're able to provide investments that are performing competitively, if not better, than our conventional investments, with what we believe to be less risk, as well as satisfying kind of the social and environmental bottom line as well. So, I really think we're at a point where you can have your cake and eat it too. And, hopefully 10 years from now, we won't be talking about socially responsible investing, because it'll just be called investing.
It'll just be called investing, right?
Yeah. It won't need the qualifier. It'll just be how we're all doing it.
For sure. Yeah. It's interesting. It oftentimes feel like, maybe for someone that, whose career has been in like advocating, shining a light on things that weren't fair, but in the past, you were using film and video as an advocacy form to raise awareness. And now, investing in using investment as a vehicle to sort of balance the unfairness, right? And so,
sure. Well, it's funny. My wife, I credit her with just about everything, because she's usually 10 steps ahead of me. Mm-hmm. But a few years ago, she and I were in a conversation about organic food, and I probably wasn't as educated as I am now, but at the time I was kind of like, oh, why are we buying all this organic food? I wasn't raised on organic food, and I'm fine, and it's just so much more expensive. And I remember she said to me at the time, she said, you vote with your money, and every single day when you pull out your credit card or your wallet and you spend money somewhere, you're telling the world what you think is important. And that resonated, and it really stuck with me. And, it's kind of the key thing that I think is behind, this philosophy and this style of investing, which is that we all have a voice, and we get to vote once every, 2 or 4 years, as the case may be. But we don't think about the fact that we're voting every single day with how we spend our money. And just like when I was in entertainment, movie studios make movies to serve an audience. If audiences show they want more superhero movies, guess what they're going to get? More superhero movies. It's the same way with the rest of the economy as well. If we tell the world that we want, things that are unhealthy or might not be good for society just because they're the cheapest, that's what we're going to continue to get. But if we say, no, these are the things we want, and we're willing to prove that with our spending power, then companies are going to start to think about that. They're going to start to incorporate that into their business model. And maybe you think, oh, my $2 isn't going to make a difference. But if we all start spending our $2 differently, all of a sudden that's $2 billion or $2 trillion. And you can bet that's going to make a difference. So it really is about, just trying to create a wave of how we all think about our expenses and what we do with our money.
That's so, we spoke before, and now I'm thinking even more so that, like, in order for you to, like, so it's not enough where, depending on who you are, but if you're really about the idea of creating, passion, purpose-driven businesses and lives and community and thriving, it should extend to how what you said is like you vote with your dollars, like how you actually like put the money that you are making, like how you're investing in it for the long term and short term. So this is super fascinating. Tell me what's the first step? Like, like when you even think about like the things that are important to you or the things that you see that your clients are very interested in, what are those things that, for us that like, we don't have an impact advisor like yourself, like what should we be thinking about as it relates to our wealth? and wealthy?
Well, there's a couple different ways to go about it. I mean, certainly not everyone, has a need for a full-blown advisor. And I think for people who maybe want to start small, maybe you've got $5,000 in your checking account or 10,000, or even you just want to start by putting away $100 every month, which is a great habit to start out, at even 18 or 19 years old. There are a lot of platforms online that are robo-advisors, things like Motif. There's also one called swell.com that are kind of basically automated platforms where you can invest in a different theme and they'll put your money to work for you. The nice thing about those guys is that they generally have pretty low fees because it's all done through computer algorithms. And you can pick a topic that's of interest to you or multiple topics to spread your money across. So that's a really great way to get started as you're just kind of like starting to build your portfolio. And then when you hit a certain point, you kind of feel like, you know what, I'm not getting the personal piece of this, or I want to start to expand beyond just the options that are provided through this platform. That's a great opportunity to say like, hey, let's bring, Regatta Impact or a firm like ours into the mix. And that's where we can really start to help you think about things like tax planning and different types of vehicles that might be more advantageous to your particular situation. Certainly small business owners who are thinking about retirement. There's so many different types of IRAs out there, between SEP IRAs and solo 401ks and cash balance plans that, are all specifically tailored for unique circumstances. And certainly as people grow and their financial lives become more complex, that's where someone like us can really step in and provide value.
That's great. And so it seems like 5, 10, maybe 20, 25,000, you can start working with a robo-advisor, anything of that, then you can start thinking about, having somebody a little bit more hands-on. You had mentioned like the solar thing that's like at around 100,000, right?
Well, so yeah, some things do have like minimum investment amounts, and that's where I kind of go back to that accredited status. So like on certain investments we use, their minimum might be a $25,000 investment, and so in order to do that, you have to be an accredited investor. Okay. So there is, I would say, I have clients. I'm interested in. I like working with anybody who has a passion for this. So I have clients that have $25,000 with me, and we have clients with several $1 million with me. So it's not really at the end of the day about how much money you do or don't have. Like and for me, this is such a quality of life career. It's like I want to work with people who I like and who are passionate about putting their money to work and have a vision for the future. So there's no amount that's too small necessarily, but I think potentially for people who are on the kind of the lower end of that, they might find that they would be well served with a robo-advisor while they're kind of getting their feet wet and just starting to wrap their heads around things. But I certainly wouldn't want to discourage anyone from seeking personal help, because sometimes people just say, hey, I want a real person, which I think is also incredibly valid choice.
Sure. What's next for you? What can we what's on the horizon for impact investing and for you? What can we look forward to seeing from you?
Well, I think one of the things that I'm the most excited about starting probably sometime in the next year here is a charitable fund here at Regatta called the Impact Fund, where we're going to start to put a portion of our own revenues into that charitable giving account. And hopefully clients will, maybe clients who want to be charitable but don't have a specific cause would say that was a nice one-stop solution. But we really want to build a perpetual fund that is going to start giving and supporting, whatever opportunities may come up that we feel have, tremendous impact. But that's kind of one of the big ideas that I'm really looking forward to, and hopefully over the next decade or two, we can build this fund into a multi-million-dollar fund that, will live on long past all of us, and continue to give and help the world. So that's kind of the next big idea on my radar.
That's awesome. That's awesome. And what are you personally passionate about? What's your thing?
Oh, I have so many things. I think being a surfer, certainly ocean conservation is a big one for me. Sustainable agriculture is something that is very important to me. I grew up in Texas and was carnivore doesn't even kind of begin to describe my diet. And over the years, I'm finding, certainly now I'm eating a lot less meat as I've become educated on kind of the environmental impacts of I guess, the agriculture industry and where our food comes from. Other things that are really important to me are social justice and making sure that wealth inequality, which I think is a huge problem facing us right now. I mean, we haven't seen this much wealth divide since the 1920s.
Yeah.
And the opportunities that are facing low-income communities and even middle-income communities, while we're seeing a very small handful of people become, exorbitantly rich. I'm a big believer in capitalism, but I think it's easy to forget that in the 1950s, when we were building all those interstate highways and, everybody likes to look back so fondly at those years, economically, we also had a marginal tax bracket in 90 percentile for the highest income Americans. So, I think we've got to do something to help kind of stabilize that, because I think if that continues to grow, that's not good for anybody. So I guess those are some of my hot button topics today.
Yeah. And how do you define, last question is, how do you define hustle for good?
Oh, how do I define hustle for good? I would say I don't think it has to be anything huge. I think it can just be as small as waking up every day and saying, like, what's the one thing I'm going to do today to help somebody? And, that might be as small as just like walking up to the homeless guy at the Rite Aid and saying, hey, how are you today? Recognizing that someone's a human being. It doesn't have to be any kind of major kind of push, because I do think that you change the world one little step at a time. Because if we're all waiting for that opportunity to do something huge, we'll wait forever. So I would say defining hustle for good is just finding small opportunities every day to try to improve people's lives and make the world a little bit better. My email personally is lee@regattainvest.com, lee@regattainvest.com. So if there's anybody out there that wants to talk more or is interested in learning about this, I'd be more than happy to have a conversation.
It was great conversation, and I look forward to staying in touch, and I'm happy that I've got on your email, so now I can stay up with all things impact investing. So. Oh
yeah, cool. Well, I'm glad you're enjoying it. I try to do that like once a month and kind of shift the topic across the E, S, and G. So
sure, cool.
Yeah, feel free to share.
Awesome. Thank you so much.